Welcome everyone to another episode of How to Make Money in Stocks with Investors Business Daily. We want to let you know that you have an event coming up, a Level 2 workshop here locally in LA.
I do. At the Renaissance Hotel on November the 7th. It's, as a lot of people in the LA area, please come and see me. It's a great time to really continue your education.
Right. So on this week's show, we're going to talk about how to get started with investing and how to get started with IBD. We'll go through a nice, simple, very useful 4-step investing routine.
But first, let's take a look at the market. Well, 3 major factors affected the market this week. Thursday, we had the European Central Bank President Mario Draghi, who hinted that there may be more stimulus to come.
Yes, just what we need. We haven't had enough stimulus in the last few years.
More
right?
stimulus. Yeah,
right.
Well, moving on.
Yes.
All right. And then we had Friday, that China cut their rates for the 6th time in less than a year. And they also lowered the amount of cash banks must hold as reserves to jumpstart growth in its stuttering economy.
That's right. And the third major factor, of course, was earnings. We had a big week in earnings, and we'll get into that a little bit more in a bit. But first, let's check in on the indexes. Last week, we noted how the NASDAQ and the S&P might test the 200-day line, and they did, and they passed that test. On Friday, the NASDAQ bolted higher to clear that benchmark on its way to a gain of over 2%. But note how the 50-day line is still below that 200-day line, and that points to some lingering technical weakness that will hopefully be remedied down the road.
Now, it's nice to see the indexes back above the 200-day. Stocks that rocketed this week on earnings included, it was a big week. Yeah. We had Google, we had Amazon, Microsoft, Dr. Pepper, Snapple, McDonald's, and eBay and Southwest. Now, we had a few that didn't do quite as well. We had Skechers, Chipotle, and Under Armour. But overall, it really was a fabulous week of earnings, considering the fact that all the analysts anticipated the third quarter to be a very weak one.
Right. Now, you mentioned Microsoft, so let's take a look at that. After a surprisingly strong report after the close Thursday, the tech giant gapped up to close 10% higher on volume, 268% above average. Some clear institutional buying there. And that was the best day for Microsoft in 15 years. And one of the reasons for the excitement was the momentum that it's been gaining in the cloud business, especially against Amazon.
Now, we did see some stocks give back some gains. Amazon and Google gave back part of those earlier gains. But the overall tone still was a positive one for the market, with some companies reporting strong earnings and the indexes marching higher on an increase in volume, which was very good to see, Matt, that increase in volume.
Absolutely. And hopefully that momentum will carry into next week and beyond. And then stocks like Google and Amazon that pulled back a little bit but still had nice gains, hopefully they'll just keep on climbing.
So again, the European Central Bank, China rate cuts, and strong earnings have powered the market higher. Now, next week, here we go again, Matt. We have some big names reporting. We have Alibaba, Apple, JetBlue, Buffalo Wild Wings, O'Reilly Auto Parts, Starbucks, and Virgin America. I did a video called The Earnings Watch, which can be found in the new IBD TV page at ibdtv.investors.com.
And that's just a very partial list because we have many big names that are due to report next week, from big pharma, biotech, the auto industry, energy, and others. So for a more complete list, check the earnings calendar in the Monday edition of IBD. And be sure to also check out screens like the IBD 50 and Stock Spotlight to look for stocks that are near a potential buy point, or maybe they've already broken out and they're still within a buying range.
And we're going to show you how to find stocks with a quick routine up next.
One question we get a lot is, how do you get started with investing and also with IBD? And we found that one of the best ways to do it is to just make sure that you have a regular routine so that you can see how all of these different pieces fit together. So today, we're going to look at a basic 4-step routine that helps you find and then evaluate stock ideas.
And we all do better with a routine. Your
Absolutely.
Exercise routine, everything you do.
In life,
yeah.
Right.
So we're going to follow the steps that are available in IBD University, and that can be found on investors.com for free. So as we take a look at IBD University, first go to investors.com and click on the IBD University tab that's found at the top of the page. Now we are using number 8, which is a time-saving routine using IBD.
And this is a simple 4-step routine. You first check the market direction, find stock ideas, evaluate your stock ideas, and then time your buys and sells using charts. And we'll go through each step today using the current market and also a current stock from one of the IBD lists. Now, we do want to note that we're recording this on Thursday, so the numbers may change slightly on Friday.
And mind you, this is just one idea. Many of you have a routine that works for you. I've seen a lot of combinations over the years out of the meetup groups and at the workshops. But if you're new, or you know what I found sometimes at the workshops, Matt, I found people really say, you know what? I have not been following a regular routine. So hopefully this will help you out. Now, the very first thing and the most important is the big picture.
Go straight to the image right here.
Okay.
Now, the big picture column is in the paper and on investors.com each day. So to see the current market outlook, just check the market pulse graphic, which is inside the big picture column. And there are three possibilities: confirmed uptrend, uptrend under pressure, and market in correction.
Now, we are currently in an uptrend, so now's the time to be looking for stocks that are coming out of price consolidations on big volume. Now, if the market's under pressure, you want to ease off that gas pedal just a little bit and be a little bit more cautious. And then in a correction, you really shouldn't be making new buys.
Now, no matter what state the market is in, you always want to be looking for institutional quality stocks that are setting up in bases. And the outlook can change very quickly, and you don't want to be caught flat-footed when that trend does change.
It does. All right, now step 2, and it's really important to always be on the hunt.
Absolutely.
On the hunt for stocks that may be setting up. So how do you do this, and where do you find stocks? Well, fortunately, IBD has several screens that narrow the universe of stocks that are out there down to a group that's really much easier to manage.
That's right. And we'll get into the details of each of these different IBD stock screens in upcoming episodes. But for today, we're going to look at the IBD 50. And just start by literally just scanning the analysis that is below the charts to see which of these stocks are near a potential buy point. And one currently is Ulta Beauty.
Now, in the Wednesday edition of IBD, Ulta is number 16 on the list. And in the mini chart, it notes that it is in a price consolidation.
Right. Now remember, this is step 2 of the routine where you're looking for stock ideas. So when you come across an idea like with Ulta where it is in a potential base, potentially setting up to break out, you want to circle it or just add it to an Excel sheet or however you maintain your watch list, do that, add it to that. And then once you have a few names, you want to move on to step 3.
So step 3 is we have to evaluate our stock ideas. So how can we do this? Well, one easy way is go to Stock Checkup.
And I'll do that here. You can use it on your iPad as well, which is really nice.
You can.
So go ahead and go through these steps.
All right,
we'll do
to
it
get
here.
to Stock Checkup, go to the top of investors.com, mouse over the Research tab, and then you will see Stock Checkup. You want to click on that, and then you put the ticker symbol of the stock that you're trying to evaluate in the Search tab, and you're going to get stocks evaluated by the Stock Doctor.
Right, so let's see what the doctor has to say about Ulta right now. Well, first, it shows you that it is definitely a leader within its industry group based on the 5 IBD Smart Select ratings. And you can see that Ulta ranks number 1 among its peers in terms of the overall composite rating.
Now, a 96 in the composite rating shows that a stock is outperforming 96% of all other stocks in our database with those combined proprietary ratings. Now, we're looking for the very best stocks, so the higher number, the better. Our minimum in order to get the little green dot in Stock Checkup is 95. Now, there may be stocks with lower ratings that do well, but we're trying to narrow our list to the best of the best.
And to see how Ulta or another stock that you're reviewing stacks up in terms of the other ratings against all the other stocks within that group, just click the tabs here. And then if you scroll down a bit, you'll see if you get pass, neutral, or fail ratings for a lot of key criteria, and those are represented by the green, yellow, or red circles.
And those are just like a traffic light, green, yellow, and red.
That's right.
Now, the last quarter earnings were up 22% for Ulta. We like to see 25 as a minimum, but hey, 22 isn't bad. And overall, Ulta has had some nice green circles, especially in the 6 quarters of increased fund ownership. And at the bottom of the page, you can read articles that have been written in IBD about a stock like Ulta.
Right, and as you can see, there are no perfect stocks.
There's no perfect stocks.
There really aren't.
No.
We've looked at all the different model books and stuff.
Have you ever?
Everybody has
You've
a
never
flaw.
seen all greens.
No,
everywhere.
well, it's very rare.
It's very. I don't think I've ever seen
rare.
them. Very, very
yeah,
rare.
there's always going to be a blemish or two. But look, these are not recommendations for Ulta, by the way. But if you look at the overall scores, right, it has a 96 composite rating, meaning, as you said earlier, it's outperforming 96% of all stocks in terms of the key fundamental and technical criteria. And it makes the IBD 50 list. So don't write off a stock like that without at least going to step 4 of this routine, which is to check the chart to time your potential buys and sells.
So Ulta has traded in a nice, tight fashion right along that 10-week line. The professional buying that has come into it, we can see that with a B+ accumulation distribution rating. And minus that wild and crazy flash crash day, if you really look at the rest of the base, it's really quite tight.
Right, and you can see just what an anomaly that week was. And this was not just about Ulta. This was across the board. Most big stocks did
whacked.
that exact same thing. So again, that was an anomaly. And note how it bounced back and closed near the top of the price range. So technically, yes, the depth in the base is 32%, which is fairly deep. But if you focus on the closing price for that week and then use the following week's low, the depth is just 13%. And that fits within the range of the normal 10 to 15% decline within a flat base.
And in this case, we really can't ignore that one nasty computer-generated sell-off. So this stock is setting up nicely. Let's see if it can break out. Now, none of these are recommendations, and we're just taking this is for learning purposes only. But there are 2 possible entries here. One's a bit advanced. It's 170.31 buy point. The other entry is a little bit more traditional with a 176.87 pivot.
And as we noted in our earlier series on chart patterns, we calculate buy points by adding 10 cents to a former area of resistance to make sure that the stock is clearing that former ceiling. And in the case of Ulta, which entry price you choose is really up to you and how aggressive you want to be as an investor.
And how strong the market is acting, how other stocks are acting. It put everything in the context. Are other stocks making headway? They're
how's breaking out.
How's earnings season? All of those things. Now, the stock doesn't report till December the 3rd, so there is some time before then. Will it stage a technical breakout? We'll have to see, but this one is one to keep watching. This is just an example of how to do a simple routine to find a potentially winning stock.
Right, and to show how all the pieces come together in an actual stock, we'll also take a quick break, and then we'll come back and look at a pharmaceutical stock that you all know to see how you could have found that using this routine.
Would you like an edge that helps you pick winning stocks faster? An edge that is proven to outperform the S&P 500 by 76% since inception, and that you can take advantage of today without spending a dime. More on that in a minute. Each day, our top market team at Investors Business Daily scans our proprietary stock lists and screens to find superior stocks with the most potential for big gains. They analyze these stocks every step of the way to show you basis, buy points, sell signals, and the right time to take profits. It's about as close to hold your hand investing as you can get. Introducing Leaderboard by Investors Business Daily. For a limited time, you can try all of the premium features Leaderboard has to offer for a full 14 days at absolutely no cost to you. You'll receive unlimited access to all of the time-saving research, powerful investing tools, the leaders list, cut list, and expert analysis you need to develop a winning investing strategy. And it's all 100% free for your first 14 days.
So let's take a look at Jazz Pharmaceuticals in May 2013 when it broke out of a cup with handle base and it rose 190% in just 9 months.
That is a nice move. So let's start with step 1 of the routine, which is to check the market direction. And the current outlook back then was market in confirmed uptrend. So that meant that this was a good environment for making new buys. So let's move on to check that one off the list and move on to step 2.
All right, number 2, we have to search for stocks potentially setting up. Now, Jazz Pharmaceuticals was on the IBD sector leaders list which is our top performing screen when stocks are in an uptrend. In fact, during those uptrends, and this is more in a strong bull market, the sector leaders has outperformed the S&P by 3-1.
And also note how the analysis below the chart told you that Jazz had formed a cup with handle base with a 60-30 buy point. So you know it's a leading stock and potentially setting up to break out. But you always have to do some additional research. Never buy a stock just because it's on one of these lists. And that brings us to step number 3 of the routine.
All right, now for step number 3, you want to evaluate a stock in Stock Checkup. But you can get a lot of fundamental and technical research just by looking at the little mini chart. Now, Jazz has a 95 composite rating, and that one all-important fundamental and technical rating means it was outperforming 95% of stocks in the database.
And also note that Jazz had an annual EPS growth rate of 111%. That is incredible growth. Plus, earnings were up 54% in the most recent quarter, and sales jumped 91%. So this was clearly a strong market-leading stock even before it broke out.
Now, we need to take a look at a chart. Jazz was forming a cup with handle base. This is a weekly chart. We had a lot of nice tight areas within that base, and it had been a tight performer right along that 10-week line.
And again, as the sector leaders list noted, the buy point was 60-30, 10 cents above the peak in the handle. So we have a market in an uptrend. We have a stock with solid fundamentals, and it is near a potential breakout. So if you like what you see, you could set a conditional order with your broker to buy it if it clears that entry, and guess what?
It did. And it broke out of that cup with handle base and ran up about 190% in just 9 months. Now, if you do a little math, you can see how just a couple of these big winners in the right market can significantly impact your portfolio.
Right. Now, so if you don't already have a regular routine, try using this simple 4-step routine and then adjust it as needed to fit your own investing style or how much time you have your own schedule.
Now, with this easy routine, we hope that you'll find some of tomorrow's biggest winners, and we hope that you will profit from them. Join me next Tuesday. I'm going to be doing a MarketSmith webinar with Arusha Pires, who is the manager of MarketSmith, and Scott St. Clair as we talk about the current market and staying in step with it. If you are not a MarketSmith subscriber, now's a chance for you to try a free trial, and you can do that and find more information on our website.
And both Arusha and Scott have been on our radio program in the past, and they're actually great
guys
to have on. So you can find out all the details on that at investors.com/investing show. And also, if you're not already a subscriber to the free IBD Extra newsletter, we encourage you to sign up now because the next issue comes out next week.
All right, see you next week, everybody.